Work on the group or practice work for chapter 14. So this first one, really pretty simple, just has us go through and classify manufacturing costs. You'll see here it says that some costs related to the iPad are listed below. Let me see if I can make this just a little bit bigger. Identify each cost as either direct material, direct labor, factory overhead, selling expense, or general administrative expense by selecting the appropriate drop downs. And what they're talking about is when you click in a cell, you'll get a few options that you can charge into this box. So thinking about iPads, I think we all know what they are. What do we think about the display screen for an iPad? Would it be a direct labor? It doesn't sound like that's labor. A direct material or an overhead, admin expense or selling expense. Hopefully you're already thinking that this is an integral part of the product. So I believe it would probably be direct material. What about the assembly line supervisor salary? Well, if you go back and look at the lecture, remember that I told you that the assembly line supervisor is not really working on the product at all. Instead, the supervisor is walking around the plant making sure everybody's doing their job. I can't really trace that supervisor's salary directly into any one iPad. For that matter, the assembly line supervisor is indirect labor. Anything that is indirect, basically anything happening in the factory that's not direct labor or direct material, is factory overhead. What about wages for assembly workers? So this is kind of like John when he was putting the bike together and it's actually turning the wrenches. So we're talking about the people who are putting the iPads together. Where would they fit in? I think we could probably trace them directly into the units. So that would be a direct labor. Salary of the chief executive officer. Well, the first thing I'll tell you is that the CEO probably doesn't even want to be in the factory or anywhere near it. The CEO would definitely be a general and administrative expense. What about the glue to hold iPad cases together? And a lot of people kind of get a little bit tripped up on this, but rightly so. Most people want to say it's a direct material. But what I want to ask you is, do you really think we're tracking how many grams of glue and how much those grams of glue cost to go into the iPad? You know, because some iPads might get a little more, some iPads might get a little less. It's not quite an exact science. It's not like a display screen. That's pretty standard. So things, what we call incidentals, like glue, nuts and bolts, screws, nails, things like that, we consider to be an indirect material. If you think about John's workbench as he's putting that bicycle together, he probably didn't go and requisition an exact number of nuts and bolts to put that together. Instead, he's probably got a little box of nuts and bolts sitting right there at his bench. He just used what he needs when he needs. So those are called indirect materials, and if it's not direct labor and not direct material, but it happens in the factory, it's factory overhead. How about uniforms provided for each factory worker? Well, that's not a part of the product, so it's not direct material, and it's certainly not direct labor because it's not a person working, but it does happen in the factory, right? And that's what makes it factory overhead. And then we've got wages for the retail store worker. This person doesn't even work in the factory, so this isn't a product cost. So it's not direct material, direct labor, or factory overhead. And it looks to me that our best option for this would be selling expense. And then we've got depreciation, the straight line depreciation on robotic equipment used in assembly. If this were any type of variable, then you might be able to do something else, but I kind of doubt it. It is in the factory though, right? It's in the factory, it's not material, it's not labor, and if it's not direct material and it's not direct labor, it's factory overhead. If you looked at the introduction video, then you know that you can walk right on down here to the bottom and you can click on this great little check my work link, and you'll see here that it tells me that the answer is complete and correct. Everything's got nice little green check marks next to it, so all good on that one. Use that check my work, it's awesome. Alright, so we're done with that one. We'll go ahead and score this question and we'll move over to the next one. And here we're looking at 1411 says cost of goods sold computation. Hopefully you remember what that is. We'll see if we can figure it out. So they're wanting us to complete cost of goods sold for each of these two companies. One of them is a merchandiser, that's Unimart. See, merchandising business, Unimart. And then manufacturing business is going to be Precision Manufacturing, and they've given us data for both. So here is the partial income statement that they're asking us to fill out. Looks like I probably need to make this just a tad bit smaller. How do we do it? Well, if you remember, I said that it's a formula that you just need to memorize. You really should memorize it. We always need our beginning first. So we need our beginning inventory, obviously, for merchandise, since we're talking about a merchandiser. So we want our merchandise inventory at December 31, 14. Why 14? Because this is 15. This has to be the beginning inventory. And then what are we going to add in? We're going to add in our purchases. So anything that we have to add in there, that gives us goods available for sale. What do we have to take away? We have to take away our ending inventory. So that's our December 31, 2015 inventory. Now it's just about plugging the numbers in, right? So our beginning is $275,000. And we're going to add in $500,000 of purchases, and then our ending inventory was $115,000. So our cost of goods sold should be $660,000. Beauty of a YouTube video is that if I'm going too fast for you, you can always pause and back me up a little bit. So knowing that, I will keep on going. So next we're going to do precision manufacturing. We've got the 450, the 900, and the 375. So it's kind of broken out the same way, but look at what they're calling it. They're calling it something different. They're saying finished goods and cost of goods manufactured and finished goods down here. So it is the same formula though, right? In order to get cost of goods sold, we need the beginning finished goods inventory. We need to add in our cost of goods manufactured, and then we need to take away our finished goods inventory 2015. Again, I'm just going to scroll up for a second. Here's where the numbers come from: 450, 900, 375. It's nice that they're in order. 450,000, 900,000. Felt like I had too many zeros there for a second. And 375,000. And that gives us an ending cost of goods sold of $975,000. Once again, just for giggles, I'm going to go ahead and hit check my work, and it says that the answer is complete and correct on both of those. Okay, moving on to the next one. All right, so we've got a 3 and 4. This is a cost computation, classification, and analysis. So it says listed here are the total costs associated with 2015 production of 1,000 drum sets manufactured by TrueBeat. Drum sets sell for $500 each, and then it tells us kind of some of the stuff that we have here. We've got plastic for casing, wages of assembly workers, a bunch of different things. Let's figure out what they want. So it says classify each cost and its amount as either variable or fixed, and either product or period. The first cost is completed as an example. So they're saying that plastic for the casing was $17,000, and they're listing it as variable, and they're saying that it was product. Does that sound right to you? Remember that variable is something that's going to change in relation to an activity. So would plastic for casings change in relation to sales? I think it would. The more I sell, the more plastic I need. So that would be a variable. And then it says by function, is it product or period? Well, if you recall from the lecture, anything that happens in the factory is product. Anything that happens outside the factory is period. Where do we install plastic for casing? I think we probably do that in the factory. So that cost is going to be a variable product cost. If you haven't seen this yet in Connect, if you're new to Connect, you can get the required information right here just by clicking this so you can see it quickly. Wages for assembly workers is $82,000 is the number that we're looking for. What we have to do is figure out if it's going to be variable or fixed, product or period. Wages are very different from salaries. Wages are hourly. That's how we should define that. And if it's hourly, it kind of tells me that the more we sell, the more I probably have to have more assembly workers there. So I think that $82,000 is definitely going to be a variable cost. And then we get down to, is it a product or period cost? The question is, does this happen? Does this simply happen in the factory or not? Absolutely happens in the factory. That's going to be $82,000 of product cost. So now we've got property taxes on the factory. Let's just look for the amount real quick. That's $5,000. Property taxes on the factory, is it going to be variable or is it going to be fixed? Property taxes are typically value based on the building. So that means it's a fixed expense. It's not something that's going to change in relation to sales. And then, does it happen in the factory or not? It says it's on the factory, so that was a no-brainer, $5,000 in product cost. Then we get accounting staff salaries. This is salaries now, right? Variable or fixed is the question. It's $35,000. Salaries never ever change, doesn't change in proportion to sales. So that's going to be a fixed cost. And do you think the accountants want to work in the factory, or do they want to work in a nice cushy office? I can tell you where I am sitting right now, and it's not a factory. It is a period cost. Then we get down to drum stands. The more we sell, the more we have to buy, or the more that we're going to have to make, right? So I think that's variable. And just like plastic for casing, it definitely should be a product cost. How much are they? 1,000 stands were purchased, so that's going to be $26,000 is what it looks like. So $26,000 of variable and $26,000 product. And then we've got rent cost of equipment for sales staff, variable or fixed. Rent doesn't change in relation to sales. If we go up here and look, it says that it was $10,000. So $10,000 in rent. Product or period, that's for sales staff, not factory staff. It's going to be period. How about upper management salaries? Well, salaries itself already tells you that it should be fixed. So upper management salaries are $125,000. $125,000. Do you think they want to be in the factory? Nope, they sure don't. They want to be in that nice, comfortable office with the accountants. So that's going to be a period cost. Annual flat fee for factory maintenance service. Do you think that's variable or fixed? A flat fee sounds like it's probably going to be fixed. Let's look at that. $10,000. So $10,000 of fixed cost. Do you think it happens in the factory or somewhere else? It says factory. I think that's where it goes. Product cost. Sales commissions. Sales commissions are going to change with sales. So the more you sell, the more this is going to cost. That makes it variable, without a doubt. It says it's $15 per unit. Well, the answer we want is not 15. How do we figure it out? Well, we did 1,000 units. So 15 times 1,000 is what we're looking for. So that should be $15,000. Variable, is it a product or period? It's the sales commissions, not factory. $15,000 goes to period. And then we have machinery depreciation straight line, $40,000. Straight line depreciation never changes. So that's going to be $40,000 of fixed. And do you think it's on factory equipment? If it's machinery, I'd say it's probably going to be certainly in the factory, so $40,000 there. So we just took all cost and classified them two different ways, one by behavior and one by function. What's the use? I mean, what is the point of all this? Well, it makes it kind of interesting because when we roll down to the second part of this problem, it says calculate the manufacturing cost per drum set. So this is kind of what happens in all of accounting is you get all this information from the financial accountants, the people who stopped at 211. They give you all this information, and then you as the managerial accountant needs to figure out what's relevant and what's not. What should I use for my managerial accounting report? And you'll see here we're looking at a report that says what's the manufacturing cost per drum set. And so what they're asking for is they're saying, hey, what are the variable production cost? Oh, variable production cost. Well, that would be any cost that is in variable and product. That would be a variable production cost. So I think plastic for casing is a variable production cost. So I'm going to go put that down here, plastic for casing, and it was $17,000. So that's variable production cost is $17,000. That's total. And then it says, how much is the unit cost? How much per drum set? Well, how many drum sets did we create? We created 1,000. So if I take 17,000 divided by 1,000, I get $17 per unit. Okay, everybody see how that happens, hopefully. Right, so let's go find out what other variable production costs we have. Looks like wages of assembly workers here. 82,000 is variable and product. So let's pop that in there. Wages of assembly workers, 82,000. How much per unit divided by 1,000? That just means take 3 zeros off. It's going to be 82. So if we go up and we look for the next one, we're looking again for variable product. Here's a variable product cost, drum stands. So we've got drum stands. Oops, I got to spell right. Right? And that was $26,000. 1,000 units, take 3 zeros off, is $26 per unit. So we've got so far plastic for casing, wages of assembly workers, and then we've got drum stands. Let's look for another variable cost. Let's see, the next variable cost we have is the sales commission. It's the only other variable cost we have, but it's not product. It's period, so we don't want to include it. So I think we're done with our total variable production cost. And now it asks us for fixed production cost. Well, okay, I think we can figure that one out too. Fixed product. So I look for the things that are fixed and product combined just here. The first one is property taxes on the factory. We all see that. Not this one, because that's a period. Not this one, it's period. Not this one, it's period. Then we do have the annual flat fee for maintenance, and we have the machinery depreciation straight line. So we're going to do property taxes on the factory, annual flat fee for maintenance, machinery depreciation straight line. So I'm not going to scroll up and down anymore. I'm just going to go ahead and get this in. So we've got property taxes on the factory, and it was $5,000. Divided by 1,000 units gives me $5 each. We had an annual flat fee for maintenance service. That was $10,000. Divided by 1,000 units is $10 a piece. And then machinery depreciation, okay, $40,000 divided by 1,000 is $40 a piece. Look at what this is giving us. Now, what have we done, really? We've taken all the period costs out, right? We just completely got rid of all period cost and are just looking at the product cost, because the product cost is where our manufacturing cost is, and we need manufacturing cost to help us determine cost of goods sold. So here's another way that we can do it if we're just given a whole bucket full of numbers that we have to kind of disseminate through and deal with. But another thing that this has done for us, because we know that we plan to sell, there's that word planning again, we plan to sell, get that right in a second, 1,000 units, that our product cost each unit is $180. Hopefully we're selling these units for more than $180 a piece, and hopefully you agree that we're doing the same thing. Is that the number that we should use to price our product? No, and the reason is because there's a lot of other things that we have to take into consideration that obviously we're going to be learning in future chapters. Let's go ahead and do a quick check my work on this. Let's just make sure everything looks good. Answer is complete and correct. So it looks like we're good to go there on this one. I don't think I checked the one up top. Let's check that one. And it is also saying that answer is complete and correct. So we're doing good. Remember, on the group work and the homework, you have 3 attempts to correct this stuff. So if you run into problems and you need to go back in and do it again, you certainly can. If you need to walk away from it and you want to come back and revisit this without submitting it, certainly you can hit save and exit and come back to it. It does not burn an attempt. But if you're ready for it to be graded, let's go ahead and hit submit and get that done. It'll say something like this: are you sure you want to submit? And you say yes, and it says, hey, you got 100% on that. And then, if you did have anything wrong, you can say show the correct answer so that you'll know what you need to fix. That concludes our group work or practice work for Chapter 14.